Hi everyone, my name is Rex from East Business Service. Today we will talk about what is fringe benefit tax, or what we call FBT, and um, what is the tax implications on your business activity in 2024. So first of all, fringe benefit tax is basically a tax on the employee's benefit other than salary and wages. For example, like you pay for your employee lunch, that is a fringe benefit, or you let your employee to use the company assets, that's a fringe benefit. And the FBT tax rate is usually about 90% of the benefit value. So this is a um, high tax rate in Australia. So every employer should be aware of this fringe benefit tax. Okay, next. Yeah. So why do I need to file a FBT return, even the employers believing themselves don't provide fringe benefits. Uh, the reason is simple because if you don't launch an FBT return, um, you're deemed to have FBT launchment obligations indefinitely. What it means is if the ATO later find out you have fringe benefit tax obligation for the current year, they might be able to say, look, because you never launch your FBT return, so we can look back to, for example, previous 10 years of your FBT obligations. Well, if you have launched your FBT return before, then you will lock the review period for the ATO. So the ATO review windows will be limited for the FBT return that hasn't expired yet. For example, if you launch your 2019 fringe benefit tax return before, um, then the ATO only have 3 years to audit your 2019 tax return as the fringe benefit tax return, which means in 2022 the review windows lapse. So which means the ATO can't review your 2019 tax return. So that's the reason why we suggest employers should launch a zero fringe benefit, even though they don't provide any fringe benefit to their employees. So then you might ask, what is fringe benefit? Do you have any other example? So we have prepared a list of common fringe benefits provided to employees. Some employees might not be aware of those fringe benefits. So I think it is good to share those key activities that could be relevant to your business. First one is you're allowing your employee to use a company car, or you engage a third party finance provider to undergoing a what we call novated or sacrifice on the employee's car. And next one is providing car parking to your employees within 1 kilometers of working premises, allowing your employees to find a parking spot at cheaper rate, or being more convenient for them to work. And number three is the entertainment. So entertainment usually refers to meals, drinks, party, event tickets, and some uh, um, Spa, for example, those are entertainment. And if you provide vouchers and coupon to your employee to buy company's goods or service, that's a fringe benefit as well. So um, a while ago, we have an individual clients being rewarded for a company vouchers because um, his sales target has been the um, has so he has satisfied the sales target and also being the top seller in the teams. So because of this, the employer is required to um, report the fringe benefit provided to the employee in relation to the vouchers. And the next one is about the gift card. So you sending a gift card to employees in Christmas, Easter, New Year's, that could subject to fringe benefit. So the employer should be aware of this one as well. Very common for employers sending gift cards. So watch out for this. And next one is paying for employees traveling expenses. Um, your employees might traveling internationally to visit their families. As employers, might try to be nice to the employee, paying for those international travel expenses. Those will be subject to FBT, unfortunately. Um, and the next one is about allowing employees to use or living in the company's properties. For example, if a company um, has a properties, has a buildings, residential buildings, then if the employees allow the employees to living in that buildings, providing some, rent-free um, residential arrangement, then it will subject to FBT. Yeah, so some employers may say, well, I'm treating my employees well, but I'm sorry, in Australia, under Australian FBT rule, that is a fringe benefit. And next one is paying employees' expense that are not related business. Obviously, if you're paying for the groceries, paying for some private expenses of an employee, that is uh, subject to FBT again. And the last one is very common. If you're buying a coffee for your staff, that could subject to FBT as well. So that's that's it sounds a bit awkward, right? But this is what the FBT does. Well, if you think if your employer believes their activities subject to FBT, then you should launch a FBT. So currently, the ATO has um, deployed a significant resources on the FBT issues. They may try to use uh, what they call data matching to identify the potential fringe benefit that hasn't been um, reported. For example, they have access to states registrations. So, for example, in WA, it's Department of Transport, Victoria Railroad, New South Wales Service New South Wales. So those, because they have access to those car vehicle data, so they will be able to know how much car does the employees have, and they can sort of to perform some data matching against your employees, and also checking your motor vehicle expense report in the tax return to do some analysis to see the risk of the FBT audit is significant. So if there's a significant risk, the ATO might contact the employers to check the FBT obligations. So watch out for this. That's very important. But of course, um, employers should be well prepared for this. And so it is recommended to consider FBT issues and launch a FBT return every year, even though you don't have FBT. Um, then also there's a lot of strategies to reduce your FBT obligations. Um, so please contact us um, if you want us to handle your fringe benefit tax issues. Now, the next one is about the salary arrangement that could subject to FBT. So there's two main stream of employee benefits. One is called salary sacrifice, and the next one is about novated lease. So let me just talk about the salary sacrifice first. So salary sacrifice means the employers will pay for the private expense of the employee, for example, car expenses. So the employer will pay for employees' fuel, radio insurance, car loan repayments, etc. And then the employees on the end they will agree to deduct their salary in order to reimburse their employers. So this is what we call salary sacrifice. Okay. Um. Now, so there is a tricks on salary sacrifice. In some circumstances, employees could enjoy a GST saving and also income tax saving if the total car expense um, exceed the 20% of the car value. For example, if the total car expense is about $500 and the car value, the purchase price, usually is the purchase cost, is let's say it's $1,000, so 20% will be $200. So $500 car rent expense compared to 20% of car value, $200. Um, you know, the difference, $300, could be potentially a GST free could potentially be a GST saving and the income tax saving for employees, but not for employers because the employer will get fully reimbursed anyway. Um, but the downside for the sales sacrifice, especially for car, is because the company bought the car, so it's under the company's name, it's owned by the company. So if the employees resign from the company, the vehicles will the vehicle's title will not transfer to the employees. And the next one is a novated lease. Novated lease is very common and being used for the vehicle purchase. Generally, it's a it's a bit of complex arrangement. What it means is there's a free party signing an agreement that involve a leaser, an employer, and an employee. So basically, the employers will say, "Look, I will pay for all your car expenses and the lease, so I will undertake the responsibility to pay the car lease and the car running expenses." Um, and then uh, the leaser, which is the finance person, will give the car to the employees to drive, and like what I said, the employer will pay for it, and then the employee will forgo will agree to deduct his salaries to reimburse the employer for all the car payments. It's quite similar to say sacrifice, but but this arrangement involve a lease. So because there's a is a lease agreement, um, that then the lease agreement is often transferable. What it means is if you and if I mean if an employees resign from the company and he or she moved to a new company, the new employers could decide whether they are happy to take it over from the old novated lease. If they're happy to take it over, then the lease will be continued, and the employee will be able to continue to drive their dream car. Okay, and then when all the repayments are done, the car ownership will, upon employees agreement, the car ownership will be transferred to the employees. So, but the downside is if you are using novated lease, the employees will be expected to pay a little bit higher um, uh, for the for the novated lease account fee and management fee and some other finance costs. Now, the next one is about a car again, because this new fringe benefit tax concession is very, very attractive. Um, it was introduced last year, I believe, back in 2023. What they say is if you um, let your employees to use the company's electronic vehicle, a EV, then it will be FBT free, no matter how long they drive, no matter the expense is high or not. It's completely FBT free. And of course, we don't know when the this EV FBT exemption will end, but in my opinion, it could last for at least 5 years, I believe. Um, then it is good opportunity to consider to utilize this exemption if you want to buy electric vehicle for your employees. And also, no, also, I mean, therefore, it is uh, very popular, and you can see there's a lot of advertising about novated lease for the electronic vehicle, a novated and self-sacrifice for electronic vehicle. Um, that is because it's FBT free, meaning that the employee can achieve a full GST saving and full income tax savings. Usually, self-sacrifice or novated lease uh, will will be used by the employees working in a hospital or paramedics. But because of these FBT exemptions, all industry will be uh, fully benefit from um, the novated lease. So think about it, and let's go to the next line. Now, so the next one is what is the electric vehicles under the tax law? So the laws just say, well, is a battery, is an electric vehicle operated by a battery or a hydrogen? And there's a type three, it's called plug-in hybrid. Plug-in hybrid electric vehicle means um, there's a fuel tank in the car, but also there's a battery in the car, so you can charge. You can refill the car and also charge the vehicle. So it has a dual purpose. But this Type 3 plug-in hybrid vehicle FPT exemption will expire on 1st April 2025. And the next requirement is the payload must less than 1,000 kilos, which means it's a 1 ton, and carry less than 9 passengers. So generally, as a SUV or a pickup truck would satisfy these requirements. So payload, the word payload means the carrying capacity. Now, the third requirement is the purchase value. So the value of the electric vehicle must less than about $89,000, meaning that when you buy this vehicle, you don't need to pay luxury car tax. If you receive an invoice that has luxury car tax in the invoice, then unfortunately it's not an eligible vehicle. So watch out for the value. Next is about the ownership requirements. So the car must be first used by person after 1st July 2022. If this is a second-hand car, then you have to look back to the history to see whether the first owner acquired this car after 1st July 2022. So the right hand side just shows the potential electric vehicle that would eligible for the this FBT exemptions. So like the BYD, Capus, Hyundai, Ford, Kia, Tesla Model 3, yeah, this is very popular. Polestar, Nissan, Mitsubishi's, yeah. I think there's apart from that, Mercedes GLA would be eligible, and also BMW um, um, BMW X3 electric or X1 will be eligible as well. But if you're looking at Porsche Electrica, unfortunately, it won't be eligible. Okay, so that's it for the FBT video for this year. Thank you for watching. So once again, if you guys have any questions, please feel free to contact our team at Yeast. Thank you. Bye.